Good afternoon, everyone. I am Joan Hortalà, a partner at Cuatrecasas. Let me welcome you to this event on behalf of the Tax Practice Area Group of the Extended European Network, a non-exclusive network of prestigious European law firms made out of ARENDT and MEDERNACH in Luxembourg, Arthur Cox in Ireland, CHIOMENTI in Italy, GIDE in France, Lesage in Germany, Homburger in Switzerland, McFarland's in the UK, and Cuatrecasas in Spain and Portugal. Our cooperation on joint projects strengthens our ability to provide seamless, integrated services to clients in complex cross-border transactions, international projects, and litigation. Together, we can provide a full range of services through our 2,000 lawyers in 27 offices throughout Europe. Today, we want to share with you our views on the so-called Unshell Directive proposal, or ARENDT 3. As you are most probably aware, last December 22nd, the European Commission finally published its announced proposal for a directive designated to prevent the misuse of shell entities for tax purposes. Reactions and concerns from the European tax community have quickly spread out on different forums. After the GAR, the principal purpose test embedded in the MLI, DCJ Danish cases, multiple domestic court decisions, is this initiative a way to wrap them all in a single substance test? Or is it just a new additional compliance requirement, topping up the large list of the already existing ones? Which will be the practical tax consequences when a company is qualified as a shell company for tax purposes? We, I mean the European network, understood that the best way to approach and better understand this initiative is to ask the author, the European Commission. This is why we asked Mr. Savino Rua, Head of International Tax Sector at DG Tax Sud, to join us for introducing to you all this brand new EU substance test. After his presentation, some of my partners, Thierry Lesage, Paolo Giacometti, Ailish Finnerty, and Olivier Dauchez, will place some questions to him. Mr. Rua, thank you very much for joining us today. The floor is yours.
Thank you very much, Joan, for this introduction, and good afternoon, everyone. First of all, let me say a word of thanks to you for having invited the European Commission today to be together with you and many participants for this webinar on what we consider is a very important new tax proposal, namely our Unshell Directive. You have already introduced myself. This talk is not about me, but it is about Unshell. I just want to say that, of course, what I'm going to present you is the result of teamwork across several different parts of our organization. And it goes without saying that I do not officially represent the view of the college, of the commission itself. These are views from one of the members of the staff of the commission. So with these words of disclaimer, I would now move to my presentation, and I hope you can all see it. I just want to, obviously for the sake of clarification, make clear that my remarks will concern our proposal for a new Council directive laying down rules to prevent the misuse of shell entities for tax purposes, also known as Unshell. Another nickname which is sometimes used is ARENDT 3, but the way we usually refer to it internally and also in our documents is Unshell. And here you have a reference to it. Next slide, please. So during my talk today for about 25 minutes, I'm going to guide you through what we consider was the problem we wanted to address with Unshell. Then I will go step by step through how we consider that Unshell is supposed to work, focusing on its role as a filtering mechanism. I'll give an overview of the different steps, talk a little bit about enforcement and monitoring, and conclude. Next slide, please. Yeah, let me start with a few words about the problem to which Unshell is supposed to be a solution to. Already in the introductory remark, and obviously you know it very well, there has been a lot of action over the past years by the European Commission, and not only the European Commission, to tackle tax avoidance and tax evasion. And of course, it will take quite a long time to list all the actions that have been taken. Key message that I want to pass is that in our understanding, Unshell is complementary to what has already been done by being a targeted initiative to tackle one aspect of the problem that has not been addressed so far explicitly. That is to say, the use of shell entities for tax purposes. It's fair to say that member states, in some cases, in many cases, they have in place anti-avoidance tools. However, at the moment, there is not one single rule book at the EU level to tackle shell entities for tax purposes. And furthermore, most of the measures which are in place are rather curative, ex post, rather than ex ante. And that's really one of the key added value of Unshell. Unshell addresses the problem within the European Union. Its geographical scope is limited to the EU member states. But as we said already last year in December, we are working now on a new initiative to tackle challenges linked to shells, non-EU shells. So next slide, please. Yeah, so this slide is just giving you an overview of the different steps of what I call here in this slide the Unshell filtering mechanism, or to be concrete, the Unshell sieve. I'm going to go through these different steps over the next 10 minutes or so, 10 or 15 minutes. And this slide is just supposed to serve as a kind of a map of the different parts that we talk about. So let me now begin with the question, the first block here, the question of the scope of Unshell. Unshell starts with a very broad scope, and I'm sure you have all noticed it. Article 2, when you look at it at face value, so to say, at first reading, it's extremely broad. Indeed, it says that the directive should be applicable to all undertakings that are considered tax resident and eligible to receive a tax resident certificate in a member state. The intention here is to cover companies, but more than that, not only all legal entities irrespective of their legal form, but also, importantly, legal arrangements such as trust, partnerships, foundation. Next slide, please. Yeah. As I just said, the scope to begin with of Unshell is extremely broad. However, Unshell operates as a filtering mechanism. So the first important step now is about the self-assessment and the gateway. Let me explain. Once an entity falls in the scope of Unshell, which is likely to be quite a frequent case because, as I said earlier, the scope of Unshell is very broad, the entity will be asked to self-assess, and I wish to stress this concept, to self-assess whether or not the entity meets a series of three gateway criteria. Importantly, the entity, in order to move to the next step, will have to meet all these three elements cumulatively together. We don't have time perhaps now to go into many details, but essentially it's important for you to be aware that this three gateway criteria concerns, first of all, share of passive income. That is to say, the entity should receive passive income to the extent of at least 75% of its overall income. It's the gate 1. The gate 2 is meant to ensure that only entities that are engaged in cross-border activity are, let's say, moving to the next step. And finally, gate 3 concern outsourcing of administration of day-to-day operations and management functions of the entity. I wish to stress here that this should not be understood as general outsourcing, but outsourcing of key functions of the entity. Stop here, I think, for some question.
Yes, Savino, can I make a question, please? So with respect to the gateway criteria under Article 6, when making reference to the relevant income, the cross-border transaction, and also the outsourcing of management functions, I mean, the rule provides for an assessment period covering the preceding 2 tax years. So I was wondering how would said criteria be applied in cases where the 2 years is not met, for instance, in case of a newly established entity, because of course, the 2-year monitoring period seems to suggest the valuation of a trend, and indeed a company may change, I mean, the level of these criteria over time. However, there could be cases where a company, I mean, exists for a limited period of time, and maybe those might be also cases, I mean, of misuse. So how would you think that would be tackled?
Yeah, thanks a lot for the question, Paolo. So indeed, I think the intention of Unshell is to, especially when it comes to the self-assessment and the cumulative criteria, is to indeed be based on a trend. So the 2 tax years there are there for, I would say, for a reason. In other words, there is a need in our understanding for a certain amount of time in order to gather sufficient evidence for an entity to meet and self-assess whether or not the entity would, let's say, move to the next step, or in other words, pass the gateway criteria. So your understanding is very much right. On the other end, you're also asking what happens then, for instance, if there's an entity, a short-lived or very young entity. That's a very good question. And I think our answer would be that Unshell, while being complementary and additional to several other tools that already exist to tackle issues of tax avoidance, tax evasion, at the same time, of course, does not leave, is not the exclusive tool. In other words, we trust and confident the member states have at their disposal other tools than Unshell in order to tackle possible uses or misuses for, how shall I say, very young entities. Thank you.
Thank you, Savino. Thank you very much.
Yes, thank you, Savino. On GET 3, if you allow me, I would like to ask you another question. We understand that the proposal aims at tackling entities that lack substance and are mainly tax-driven. In practice, it is absolutely common and normal to correlate the activities carried out and the extent to which a company physically exists in terms of means, premises, and staff. And I am not fully clear on that concept of outsourcing administration that you want to apply in respect of GET 3. And I would like to, if it is possible, to get a better understanding of that.
Yes. Thank you very much, Olivier, for this question. I mean, that's another, I would say, touching a very important point. General remark, you all know it, of course, also very well. I mean, directive, there are limits to how specific we can be in a directive. I think it is a correct observation that indeed outsourcing is not among the defined terms that are put forward in Unshell. I cannot elaborate more at this stage compared with what is the current text of the directive. However, I want to assure all the audience and all participants that it is most likely that either during negotiations in council or afterwards, once Unshell will be adopted, that is to say, during the implementation phase, there may be indeed a need for clarifying, for instance, the criterion of the terminology, the concept of outsourcing, which is used here, to make sure that there is a common implementation across all member states. So I think your question is really spot on. But I would also like to say that there is already, and it's important to have it in mind in terms of background, there is already a common understanding across tax administrations of the concept of outsourcing, and specifically when it comes to special tax regimes within the EU in the context of the Code of Conduct Group for Business Taxation, as well as in the context of zero or very low tax countries when it comes to third countries. In other words, we expect that member states already start from a very good shared understanding of this concept, but indeed there may be a need to specify it further later. Thank you.
I think, Joan, you have to move the slides.
Joan, would you like to move to the next slide, please? Thank you very much. Okay, so I continue. I was talking, but then we also had questions. I was talking about the gateway, and I think this slide is just meant to provide like a deeper dive on the first gate 1, which concerned passive income. And without reading this slide, because also we don't have so much time, the key understanding here, the takeaway message is that that is meant to tackle passive income. And when passive income accrues to an entity over and above 75%, then that gate will be met. We can move on, I think. Next slide, please. Thank you. Yeah, this slide is about something extremely important in Unshell. Pretty sure you all saw it. There is a pretty important amount of carve-outs that are introduced almost from the start, actually, in Unshell with Article 6, Paragraph 2. Couple of words about these carve-outs. Our intention was to carve out from the start entities and sectors that would pose the least risk of having shell entities that could be used for tax purposes. You have the list, obviously, in the legal proposal. Perhaps here I can just mention the question of regulated financial undertakings. So there is already a very robust set of regulation, not only at member state level, but also at EU level on regulated financial undertakings. And therefore, it was considered appropriate and proportionate overall to carve out regulated financial undertakings from the scope of Unshell. This is not the only sector which is carved out. Here you have other examples on this slide, and there are more. And I also wish to mention here another important piece of the architecture of Unshell, that is Article 10 concerning exemption. And I mention it here because the way it functions is the following. Once an entity falls in scope of Unshell, and once this entity crosses all the gates of the gateway, that entity can apply for an exemption. And if it's granted that exemption, there are no more requirements that that entity would have to face under Unshell. Of course, we can discuss this perhaps later, but the key message here is that we really try from the start to have a proportionate scope in our proposal. Next slide, please. Yeah, I will now move to another important building block. That is to say, what happens once an entity passes the gateway? Well, the answer is there is a reporting of information, and that reporting of information concerns whether or not the entity meets minimum substance indicators, Article 7. 3 criteria have been put forward in Unshell, and I know that these criteria are open to discussion, and I look forward also to questions later. It's more an art than a science, I guess, to define what the substance amounts to. In our proposal, we will define it in the following way. First of all, whether or not the undertaking has own or exclusive premises in a member state. Secondly, whether or not the entity has at least one active bank account in the European Union. And finally, whether or not the undertaking has a sufficient number of employees, qualified and resident close by, or at least one of the director that is sufficiently qualified and close by to the entity. Important, all these indicators will not just be a tick the box exercise, and Shell introduces also a requirement for documentary evidence to back these statements concerning substance indicators. If an entity meets all the substance indicators that are shown here and provide documentary evidence that that is the case, the mechanism of Unshell stops there. there are no tax consequences. If an entity fails to meet even just one of these three elements that are shown in the slide, then if that is the case, and unless there is a rebuttal of the presumption, tax consequences kick in. So this moment of the determination of whether or not an entity meets minimum substance is really crucial for the way Unshell is supposed to work. Can move to the next slide, please.
Savino, a question if I may. It's Ailish Finnerty here. One issue that has come to our attention in reviewing the proposal for the directive is its compliance with EU law. And one central tenet of EU law, as you know, is freedom to provide services cross-border. But as you have just outlined on this slide, there is a requirement in order to demonstrate minimum substance that one of the directors, or at least one of the directors, is resident in the same member state or close by to the member state in which the undertaking is resident. Similarly, there are provisions whereby a holding company is presumed to be a shell entity if it is holding operating subs in another member state of the EU. This seems to cut across the fundamental freedoms of EU membership. Can you comment on that, please, and how that is proposed to be addressed?
Yes, thank you for your question, Ailish. Well, I think it won't come as a surprise to you if I say that we have obviously paid very great deal of attention in making sure that our proposal would obviously not go against and not be in breach of EU law and most importantly, the fundamental freedoms. So I think we don't share this understanding that the way we have phrased minimum substance indicators would amount to a situation of breach of fundamental freedoms. And actually, I would like to emphasize that explicitly to minimize such risk that this type of provision may be challenged in terms of being breach of the freedoms, precisely for that. When you look, for instance, at the second criteria concerning the bank account, generally says within the European Union, and when you look at the third criteria again, the criterion is not about having the tax residency of the director in the same member states, or rather, that is one way to meet it, but there is another way to meet it. And the way to meet it is that the director would be resident for tax purposes at a distance which would be compatible with the performance of her or his duty. Now, I understand that this concept, again, as the one of outsourcing, may require, in order to ensure it is implemented effectively and in a consistent manner, also this concept, it's a fair point, may be further specified, but there is no intention here to limit this only to one member state, and I think we are explicit by using this or conjunction in our text. I also want to say, of course, that this third element of the substance requirements would also be met when looking at the majority of the employees. There again, we make use of this concept of close by distance. And there again, I think there is, I think it's a fair point that that type of language may require further specification. But again, we do not consider this to be in breach of EU law, far from it. And we are obviously we have worked a lot also with our experts on the fundamental freedoms to make sure that this is the case. Great. So I think I'll continue, move to tax consequences, try to speed up a bit as well. This time is running. Great. So tax consequence. This is a very important piece of Unshell. Tax consequences are really a fundamental element of our proposal. Importantly, what I'm going to tell you about now would only concern, I repeat it again, entities that are in scope, that cross the gateway, that are not carved out, not exempted, that do not meet minimum substance and do not review the presumptions. Also, there is a relatively limited set of entities that will be concerned by this provision. Tax consequences, I move to the next slides, hoping that maybe they're clear. Yes, so this is a way graphically to show tax consequences in a simple manner in an intra-use scenario. So imagine here, for instance, a situation whereby you would have three, let's say, elements: a payer, a shell entity, and a shareholder, all located within the European Union in different member states. You can imagine today a path whereby there will be a flow of income from a payer to a shareholder via shell entity or through a shell entity. That is the red path, the top part of this triangle. Well, simply put, the basic idea of Unshell is that if the shell entity that is shown in this triangle would be deemed not to have minimum substance, this entity would face tax consequences, and in practice, this would mean that the member state would have to disregard the tax treaty concluded with the member states where the shell entity is located, and essentially ignore the existence of a shell entity for tax purposes, and tax consequences would be drawn directly at the level of the shareholder without the intermediation of the shell. So the member states of the shareholder then would tax the income accrued to the shareholder, deducting possibly any tax that is paid at the source member state. So the key word here is that shell entity would be ignored for tax purposes. Now we can move to the next slide. Yes, this is about fair country. That's another important element here. As I said at the beginning, the geographical scope of Unshell is limited to the EU member states. But at the same time, we are aware, of course, that there may be shareholder or sometimes payer of shell entity located in the EU, and those payers, those shareholders may be located in a fair member state, in a fair country. In this slide, I'm showing you an example when we have a shareholder that is supposed to be established for tax purposes in a fair country. So how would it work? So I like what I said earlier. In an intra-use scenario, the member state would have to disregard the tax treaties and, importantly, also relevant tax directive, namely the parent subsidiary directives, with the member states of the shell. So that element of tax consequence is the same as also in the previous slide in an intra-use scenario. The difference here is that in taxing the income that is then, let's say, addressed to the shareholder located in a fair country, the member states will, in any case, respect the provisions of the double tax treaties between them and the fair countries. In other words, Unshell will lead to specific tax consequences in terms of bilateral tax treaties and EU directives between the member states, but at the same time will not affect the rights which are originating from double tax treaties concluded between member states of the EU and the fair countries. It goes without saying that if the shareholder is located outside the EU, as this is the case in this example, and there is in the bilateral tax treaty between the member states and the fair country a withholding tax at source, that tax shall be withheld at source, as it would be due in the absence of the shell entity indeed. Also in this case, the shell entity is ignored for tax purposes. Let's move to the next slide, please. Yes. Here, I'm afraid we're running a little bit out of time. So just shortly, I would like to say, I want to say something about property. Well, I mean, as you have surely seen, with Unshell Article 11, we're introducing also specific consequences in case the shell is used only for, let's say, basically managing, for instance, real estate, but not only that, also other types of valuable property. If we move to the next slide, perhaps I could say a few more words. Yeah. So here again, you see again the same triangle I've been using for the previous slide, just to really, in a very simple manner, illustrate the tax consequences of Unshell. In this case, it is applied to a case in which the shell would own a property. And let's go through this example. So in this case, you would imagine that there is a shell entity that is owning a property, why not perhaps a beautiful chateau in a member state. There will be shareholder of that shell in another member state, other than the shell and other than the member state where the property is located. So here again, in case the shell entity would face tax consequences, the first most important consequence would be that the member state would have to disregard again their directives and double tax treaties concluded with the member states where the undertaking, the shell undertaking, is located. The property would be then considered as owned directly by the shareholder and would then form part of the tax base for the assessment of the tax liability of the shareholder in her or his relevant member state. Here again, if there was a case involving a third countries, which is not the case of the slide, but I wish to repeat myself here because it's an important point. If there was a third country concern, again, tax consequences of Unshell would still work in a way that the rights under double tax treaties with third countries would be maintained. We can move now to the next slide, please. Yeah, this slide is really just an illustration to pass one important message. And the message is that Unshell indeed is supposed to be targeted initiative, a targeted initiative whereby at the end tax consequences should be faced by a very limited number of entities. According to our impact assessment, we consider that between 29,000 and 75,000 entities EU-wide would be reporting entity. This means that these entities would not necessarily face tax consequences, as they would still need to prove whether or not they meet minimum substance. So basically, basic message here is that Unshell really should be understood as a filtering mechanism or a sieve, so that tax consequences are really faced by a limited number of entities that are used for tax purposes, and essentially without affecting the greatest majority of genuine businesses in the European Union. Next slide, please. In this slide, I am just trying to put some beef around the bones of the triangle that I showed earlier. I think I don't need to go into many details here. This essentially is just a slide that in a very simple tabular format try to associate the key obligation that would be generated by Unshell with its legal basis and with undertakings that are impacted. As you can see here, the tax consequences would impact really a very specific type of undertaking, that is to say in scope, that would not be excluded up front or carve out, that would have to pass all the gateway cumulatively, again, I want to stress that would not be exempted, that would lack minimum substance, and would not have rebutted the presumption. So there's many possibilities for being in a situation where there would not be tax consequences. We can move to the next slide, please.
Thank you, Savino. Just a question here, if I may. So you already mentioned that there is no definition of outsourcing, and there are actually several concepts in the proposal that are not further defined, or for which interpretation is left at the discretion of member states. This holds true for the rebuttal of the presumption, for the exemption. I was wondering whether a risk of non-harmonized application of the directive has been assessed by the directive. Just as an example, in our daily life of tax practitioners, we see for DAC 6, the directive on mandatory disclosure rules, there have been quite different interpretations adopted by different member states of the same hallmarks.
Yes, thank you, Thierry, for this question. Obviously, I think once we come up with a proposal for a directive, obviously our expectation is that this directive is implemented in a consistent manner across the EU. You mentioned the case of DAC 6. We know there may be other directives where there may be some difference in implementation. That's not something the Commission likes. I'm sure that is not surprising to you. Another question is, what can we do to prevent it, and what can we do to fix it? Well, to fix it, of course, we always have this, can we say, the nuclear option or possibly infringement, as you obviously know. But I think it's also important to think about preventive measure. And at the moment, as we stand, of course, Unshell is just a proposal. I think we look forward to have a good work with the member states in council in terms of negotiation in order to bring some clarity where there is a need to bring clarity, having in mind, of course, that this is supposed to be a directive. But then as a second step, we're also having to do a very important work, also the Commission, in terms of checking the transposition measures. That will be crucial. The member states will adopt in order to translate Unshell into national law. Last but not least, we do a lot of work also here on a more, if you like, day-to-day tax administration type of business. We have expert groups, we have programs to bring tax experts of the different member states together to discuss in practice how they're implementing directives. In this case, hopefully one day we will do that for Unshell. And that type of work is extremely important precisely to avoid something that I think we want to avoid as much as you want to avoid, that is to say, a divergent interpretation of our directives. So again, thank you for your question, Thierry. We can move now, we're almost at the end, enforcement and monitoring. This slide is very important. Well, all slides probably were important, but here I think the key message here is that enforcement and monitoring is something that we really try to pay a lot of attention in designing this proposal. Why? Consider that, as I said earlier, key step in Unshell, at the very beginning, after the scope, the question is about whether or not an entity self-assesses that it passes the gateway criteria. Self-assessment. We rely a lot with this proposal on voluntary compliance. We know that the great majority of taxpayers want to do the right thing. At the same time, there's always regrettably some number of taxpayers that, for one reason or another, don't play by the rules. Unshell comes with what we believe are strong incentives for taxpayers, for entities to self-assess correctly and correctly do the reporting afterwards. What are these incentives? First of all, the penalties. And penalties are sufficiently robust in our understanding, at the same time proportionate to incentivize compliance. And here you can find in the slide short line recalling these penalties, which are included in our proposal. Secondly, very important, Unshell Article 15 introduces something relatively innovative, I would say, in terms of requests for tax audit. How does it work? You would have a provision whereby a member state would be able to ask another member state to conduct an audit of an entity that the requesting member state would have a supposition that is not complying or doing the right thing, so to say, under Unshell. That is Article 15. That is also a very powerful tool, we believe, that would incentivize compliance from the start by the entities concerned. Very importantly, when it comes to the audit, the request for an audit would have to be met by the requesting member state. And that's pretty strong and pretty innovative, I would say. Last but not least, Unshell comes also with an update to the Directive on Administrative Cooperation that is known by all of you, I'm sure, as the DAC. Unshell broadens the scope of automatic exchange of information to cover the reports that entities having passed the gateway would have to report to the tax administration where they're resident for tax purposes. Well, that flow of automatic exchange of information in our expectation is going to lead not only to provide much more information to member states, information useful to conduct tax control and assessment, but also importantly, that flow of information should also generate a sort of peer pressure between the member states so that they can sort of, if you like, check how each other are implementing the provisions of Unshell. So audits penalties and exchange of information, we believe, are a strong incentive for the right enforcement of Unshell. Move to the next slide. So that's the conclusion. Well, I think from the Commission side, we attach a lot of importance to this proposal. We think this is a proposal to tackle a specific problem. It's a targeted proposal to tackle a specific problem of the use of shell entities for tax purposes. That is something that we as European Commission would like to see ending, to see over. So Unshell is meant to do that. It's meant not to affect genuine businesses. At the same time, we expect that there will be specific tax consequences for shell entities that are still used for tax purposes, what we call in the slide, what I call in the slide, the empty shells. We are very much looking forward now to work with the member states in order to translate what for the time being exists only on paper on actual implementation. You have seen it. We came out with this proposal on the 22nd of December, and we introduced as a date of entry into force 1st of January 2024. That is to say, there is not so much time. So we look forward to start this work with the member states, and we expect to do that already during the French presidency of the Council. So that is to say, very much in the next month. I conclude here. I wish to thank you very much, all of you, many of you, for your attention, and I look forward also to possible further questions. Thank you very much.
Thank you, Savino. I think it's been a clear and straightforward presentation, which helped us to better understand the scope of this directive, or proposed directive. We have some questions from the audience. Several questions. There are some logical concerns, mostly related to the gate 3, the outsource of the administration. So while they are wondering to which extent can you outsource the administration without falling in gate 3, or if you use a corporate service provider to prepare accounts, prepare board minutes, organize board meetings, is this significant functions? Or, well, that's a bunch of questions are related to this topic.
Yes, Joan, would you like me to comment quickly on this?
If you don't mind, yeah.
I mean, again, I think this outsourcing, I think we already discussed it earlier. That is something that I think, and this is rather personal view, I guess, at this point, but take it as a personal view. I think this is really a concept that would be important to clarify and define in more details, if not during negotiations, then after in the phase of implementation, because I understand it. I understand it from your point of view, from the point of view of the practitioners, that there may be some uncertainty. And I understand that, well, if you have a new directive, let's hope that is going to be adopted, you probably want to make sure that you do the right thing. And so there is a need for clarity there. I think in general terms, the type of example that you made earlier, that I haven't seen myself in the chat, but the type of, outsourcing, for instance, the compilation of board minutes, that would be something that, in my understanding, would qualify indeed as outsourcing of the day-to-day administration of the entity. But again, there will be a lot of discussion, I'm sure, about this.
Yeah, we are sure about it too. Maybe I think Ailish, you wanted to ask some questions, and also the rest of the partners, if you want to join us on the screen.
Thank you, Joan, and thank you, Savino, for your presentation. A question, if I may. I think you opened at the outset to say that the use of shell entities is being targeted here, where they are being used for tax purposes. But it is interesting that there is no requirement for tax avoidance in terms of the motive or indeed the outcome where a shell entity is found to exist. It seems to us that it makes it much more difficult to have cross-border provision of services. And in particular, this can be a material concern for peripheral countries such as Ireland, who can't really compete necessarily with mainland European big economies in terms of large, heavy industry. and have proven successful in terms of the provision of cross-border services. Has the impact on smaller countries, peripheral countries, in the framing of this directive been taken into consideration, particularly countries where the nearest neighbour is now a third country, the UK, which post-Brexit is shaping up to become quite a potent competitor in offering alternative vehicles to an alternative service provision to what has been available in the EU. And there is a material concern that this may make the EU a lot less competitive in the global sphere. Can you comment on that, Savino?
Yes, thank you very much, Ailish, for this question. We did an impact assessment. The impact assessment, by the way, also is publicly available. We look into the question of competitiveness, and we look into the question of the impact of Unshell on not just peripheral member states, let's call it this way, but all member states, of course. There's not been a specific, let's say, Irish impact assessment, but of course, we have been very much in touch also with Irish tax administrators earlier, and we will be doing so during the negotiation. I believe that it's right to say that from our point of view, this is a balanced proposal that should not affect genuine businesses. And in our view, there is nothing to be afraid of in terms of, for instance, the Irish skillful workforce and innovative company in Ireland. We don't think that there's going to be any detrimental effect of this Unshell in terms of their competitiveness. And actually, I think really our intention here is that there should be competitiveness on creating new goods and services and not so much on creativity of tax planning. So we really hope that Unshell can deter the type of use of shells for tax planning. But then again, we also acknowledge that shell entities can be used for legitimate commercial purposes, and Unshell comes with provisions to make sure that those type of shell can be exempted or can have a rebuttal. So again, I think we believe it's a proportionate proposal that will not have a detrimental effect on competitiveness of our member states.
Yeah, Savino, I fully understand that, but nevertheless, I think a key concern here is that this proposal only applies within EU and is not applicable to non-EU shell entities. And you have rightly mentioned that for the time being, the proposal will not affect double tax treaties with non-EU countries. I think the non-EU shell proposal should prevail over double tax treaties signed by member states with non-EU countries. And I wonder what would be the legal ground for that, if any, and if any, would that lead to modify the current tax consequences of the existing proposal vis-à-vis third countries?
Yeah, thank you, Olivier, for this question. I think you're very much forward-looking here. What I am now going to say is going to be very, very short. I think I can just repeat what has been the official statement from the Commission so far. That is to say that in 2022, there's going to be work on an initiative. It doesn't have to be a directive necessarily, an initiative to tackle the use of non-EU shell entities. So at the moment, I cannot say more. This is very much work in progress. I can confirm definitely what has been said, that there's going to be work on that. I can also, well, you said it, but just repeat that when it comes to Unshell, the geographical scope is the EU. Double tax treaties for countries remain, if you like, unaffected. At the same time, we are aware that there's an issue also of shell entities outside the EU. There has been a lot of work already done with the EU list. We're working on something new, but I cannot give more details at the moment. Something new that it's 2022, so soon perhaps we're going to have another webinar about that.
So hopefully good news. Savino, one of the area in which I mean we try to spend more thinking about this proposal is the interaction, if you wish, the interplay with currently existing provision. You mentioned at the outset that of course there are already a number of provision which I mean could potentially overlap with this Unshell Directive, and we have several examples. For instance, we were thinking about local domestic CFC legislation, which to some extent again would overlap clearly with substance, with a mix. A combination of situation whereby you may qualify as a CFC, however lacking substance, or you may have sufficient substance but still, I mean, qualifying as a CFC. And since, I mean, also for the purpose of multinational group, which might have a subholding located in the EU, in turn having multiple subsidiaries. I mean, there have been a lot of working over time to arrange for a compliant CFC system. And I mean, realizing that this doesn't work anymore because the company is compliant for CFC purposes, but does not meet the Unshell Directive, it's going to be painful. So is there any thinking about the combination of these two set of rules?
Thank you, Paolo, for the question. I think, obviously, from I see where you're coming from. From the point of view, of course, you're very concerned about possible overlaps, compliance costs, and uncertainty for business. That's a very fair point. I think from our point of view, we are very much concerned about that, of course, but we still believe Unshell should be seen as complementary, and especially when it comes to the CFC rules, I think the logic of the CFC rule and Unshell should be rather different. That is to say, Unshell should kick in ex ante, and essentially, once you have tax consequences for a shell entity, that entity would be essentially disqualified to apply for bilateral tax treaties by not being able any longer to make use of tax resident certificates, as you saw in Article 12. So in other words, if an entity is, shall we say, having tax consequences under Unshell, well, I think then CFC in that case would not be needed anymore. So in that sense, we don't necessarily see an overlap, rather synergies. Now, of course, you know it surely better than me, international tax environment is complicated. So this kind of comment about ensuring synergies with Unshell is surely something that will keep us very busy during negotiations with the member states. Thank you.
Thank you, Savino. I wanted to go back to the competitiveness point, but more in the context of the competitiveness of the European single market at international level. There is some sort of presumption of guilt, which is foreseen by the proposal, with quite significant compliance burdens, and this seems quite unprecedented. So while we are regulating more and more within the EU, it seems that our neighbors, in particular the UK, is trying to promote certain activities. They have announced the introduction of a new asset holding company regime applicable as from 2022 in April, which is openly promoted to compete with EU holding regimes. What is the view of the Commission on that? There is also, as you mentioned, this initiative targeting non-EU shell entities. Regarding the timeline of implementation, would it make sense to have both EU and non-EU initiatives being applied in a concomitant manner? And last question, is there, in the view of the Commission, a possible contrariety with the principles of the Capital Markets Union?
Thank you, Thierry. Lots of questions. I mean, from our point of view, Capital Markets Union, I start with the last question. Our colleagues from the DG in charge of financial services work together with us in preparing this proposal. So, of course, my answer would be no. We don't think there is an inconsistency or issues when it comes to Capital Markets Union. When it comes to the competitiveness point, I mean, I think impact assessment that we have put out there actually does not see limitation of competitiveness. I think I have to pass again this message. I think as Commission, we don't believe in competitiveness in terms of aggressive tax planning and empty shell entities. that's not the type of competitiveness that we are after. Well, if some third countries are after that, then we have tools at the moment, and we will develop further tools with this new initiative in order to make sure that we incentivize them also to play by tax good governance standards, which is something that we believe should not just be applicable to the European Union, but should be applicable worldwide. And this initiative that you referred to, Thierry, and that I mentioned earlier, may not be a directive, may be something else, but it's very much linked to the idea of tax good governance, and very much something that may most likely, build upon the work that has been doing and is done with the EU list of non-cooperative jurisdiction for tax purposes. Thank you.
It is. I know we have so many questions from my colleagues as well from the audience, but it's 3 minutes before 5 p.m. I'm sorry, I would like to stop it here. I know it's really just a kind of a interrupted meeting, but just for the sake of meeting the requirements of the time we have asked from our audience to devote for this session. It's the right time to finish here. I want, of course, to thank Savino, particularly you, for your presentation. I think it's very clear. It helped us to better understand where you're coming from, the European Commission is coming from, and which is the, well, envisaged reality. I must say that maybe we have potential different views on what would be the ultimate result of this initiative, but well, we are playing in different teams in this playground. So said that, I want to thank also all the audience for being here, and particularly to my colleagues Ailish, Olivier, Paolo, and Thierry for helping preparing this session, and well, I'm wishing you all a good afternoon. And hopefully we'll have a new opportunity to meet together and to discuss about these hot topics in European taxation. Thank you, everyone, and goodbye.
Thank you very much.
Thank you.
Yeah, bye.
Thank you, Savino.